first of all, thank you very much for coming. This is great to see such a crowd. I'm Renée Berman, and I was at DTC's Digital Asset Group until recently. But I wanted to have my panelists introduce themselves, and then we'll get into the conversation.
Sure. I'm Vaughan from Stellar Development Foundation. I run DeFi at the foundation, which basically means I touch everything from RWAs that are looking to go permissionless to infrastructure, wallets, and of course, protocols.
So I'm Chuck Mounts. I'm the Chief DeFi Officer at S&P Global. My team's mission is to help the organization adapt our existing products and services and build the new generation of products and services that are fit for purpose in digital asset markets as we strive to bring our historical expertise and franchise around data analytics and benchmarks to enable stakeholders to make better decisions, to improve market liquidity and enhance price discovery.
Hi, everybody. My name is Cynthia Bessette, and I am responsible for the digital asset management unit at Fidelity Investments. And what that means is my team sits within the asset management business. We are another dedicated investment unit that builds investment products as well as digital asset products on-chain, representing investment capabilities that my team manufactures across the ecosystem.
Great. Well, thank you so much for taking some time today to talk about this topic. We've all heard, estimates in terms of how much RWA is going to be in the future. How RWA is growing in the future. So we've seen 19 trillion by 2023. Tell me, from your perspective, what is it going to take from institutions to adopt RWA and bring that on chain?
So I'm happy to start with that one. Yeah. It's something that we, as our team, spend a lot of time talking about. And the idea of moving assets on chain, just for the sake of demonstrating that we can do that, is not enough to be able to usher in any kind of mainstream adoption. There has to be demonstrated concrete utility for the investor to want to access not just the token, but to be able to be comfortable with all of the infrastructure that it's going to take that investor to be able to hold that asset in a new custodial paradigm. So there are a number of infrastructure requirements before you can get to that demonstrated utility for the investor. So take, for example, money market funds. We talk a lot about money market funds being an incredibly important liquidity layer for our traditional in asset management division. On-chain money market funds have a similar utility, but they also provide additional utility that you cannot get out of a traditional money market fund. And I think that is a huge demonstration of that use case and being able to more efficiently manage collateral on-chain and be able to move that collateral outside of traditional bank and broker-dealer hours.
Yeah.
I might add kind of a more macro policy kind of lens to that. So I think one of the external factors that will prove to be a critical unlock is the continued policy formation, especially the policy formation that is already accelerating and underway in the United States. Passage of the Clarity Act, I think, will be a critical piece of unlocking and giving freedom, really, for traditional players to innovate and start bringing the capabilities into the digital asset ecosystem. Then I also think, probably unsurprisingly, that S&P Global, for instance, can play a critical role in working alongside the development of policy formation and regulatory environments to provide the benchmarks and risk assessments from a trusted provider in the marketplace that really gives traditional players the confidence that of a trusted brand and an historical expertise to the confidence to make decisions and innovate and bring products into the digital asset ecosystem. So not just S&P Global, but other service providers that traditional players are used to relying on to make their decisions and give them some comfort in kind of building the products that will be commonplace in the digital asset marketplace.
I think the biggest area of opportunity that we talk about with real-world assets on chain and like why to bring them on chain right now, I think that there's a lot of work being done to make to make them compliant, to have regulated custody, to do, to do all these things, to make the digital version of an asset behave the same way the underlying asset behaves and is custodied and so forth. But actually, I think the bigger area of opportunity is once everyone gets comfortable with that, then there's the possibility to make these assets have much broader reach. So in terms of Stellar, which is a layer 1 blockchain, has been around for 10 years, been used for cross-border payments, for peer-to-peer payments, for investments, all kinds of things in emerging markets. These are assets that normally have been very bordered, right? Securities follow the regulation of the place where they're issued. And so all of these RWAs that have been really confined to the borders of the countries where they're issued suddenly have the opportunity to address different markets with capabilities that maybe aren't available in those markets, and also to design new products that go abroad. So I think that's probably the most interesting and compelling reason why the assets will come on chain. Because if you're just mirroring the capabilities and addressing the same market with a digital version, it's like, why?
Right. And so, from your perspective in talking to clients, like what are some of the challenges, that they're addressing, that they have, or that the market needs to address, so you can actually bring these assets on chain in a compelling way?
Yeah, I mean, Cynthia hit the nail on the head with custody. It is a real barrier, like having these regulated assets where you need a specific type of custodian to track ownership is definitely a challenge.
Yeah. And I'd even add on top of that, as you talk about moving an asset cross-border, what has traditionally been a limiting factor in traditional finance is managing compliance. And this is where the technology can really play a very powerful role in being able to automate much of those compliance checks. So this idea of having digital identification and eligibility verification on chain is incredibly powerful, where you get the certainty of compliance for your asset to be more mobile outside of traditional borders, but yet you can still maintain that level of compliance that you have to have as a regulated institution issuing assets.
Yeah. And then when you think about the ability to, bring assets on chain, like to me, the big unlock is around distribution. And how do you actually address the distribution challenge? Like, how are you thinking about it? Maybe Chuck, how are you seeing? How are people? How is S&P helping to think through and helping clients think through the distribution as well? I think that to me, like that's a huge piece of this.
So I guess from my perspective, when you look at some of the original tokenizations of funds that have happened, besides being kind of in an experimental phase, the main push from my seat looked to be the opportunity to expand the distribution channel into a new audience set or high net worth or retail audience set. So then from my seat as sitting in the world's largest rating agency and the world's largest index provider, how can we construct the benchmarks and the analytic tools that enable those enhanced distribution networks to reach these new audiences, to reach our traditional audiences, but also these new audiences in a way that's meaningful for them. And that entails looking at how you do the analysis or kind of how you create the product itself, and then how you connect it into the marketplace, which will include most likely building a new commercial model to tap into that new audience. And so what I see in my organization is it takes a lot of creativity to not only design the product and find the partners to work with, but also to conceive of how a new commercial model can evolve to help our clients accomplish those goals.
Yeah.
I'll answer the distribution question in a different way, which is I think the mechanisms for example, yield-bearing stablecoins, I think are pretty elegant. I think that's a good example of how you can have an underlying real-world asset that's kind of powering yield, if you will, on a stablecoin. And there's some great examples, out in the marketplace now that are starting to come out. So these yield-bearing stables, I think, are a good example of they're very hybrid, right? It's an RWA, but it kind of behaves like a stablecoin, and then you put it into an app, and you have someone in Latin America who's accessing their US dollar balance, and now they can get 5% yield on that balance. And so they don't really care that it's on chain or it's completely abstracted, but they're having access to an asset under the hood. They're having access to an asset that they wouldn't ordinarily be able to buy, and it's giving them, a good value and has product market fit.
Yeah.
And how's Fidelity handling the distribution issue?
So maybe what I would add to what Ada and Chuck have already said is, as we think about how to develop products and investment capabilities that help our clients to solve their financial issues and objectives, we think of this technology as helping to facilitate better ways for us to be able to deliver investment capabilities, and whether that is yield, on chain, and how it is that we package that. Could be in an on-chain product, delivering on-chain yield, and that would be targeted to a set of investors who are very comfortable and prefer to be able to transact on-chain. Thinking about, and this is where tokenized products fit in, is addressing a demand for investment capability, whether that is capital growth or income. Those are all very what we think of as financial primitives in terms of capabilities here. For our traditional investors, and I think someone in the last panel said this, and I think this is incredibly important, is for a traditional investor, they're not really calling us, other than when we talk about Bitcoin and Ethereum. They don't call us asking us for tokenized assets, right? Investors continue to engage us, asking us about how can we help them to solve their financial objectives. And so being able to package exposures to on-chain assets in traditional wrappers is another way for us to be able to help deliver exposures that are going to be differentiated and unique in helping investors to manage their financial lives in this ecosystem. So this is really fundamentally about finance, and in our case, looking at it from an asset management lens, and then finding the right package as a way to be able to then engage clients and be able to deliver the exposures.
Yeah.
Yeah, I was thinking that earlier today's the EY panel, or the moderator put up a slide on reasons people adopted stablecoins, and one of the things at the top of the list was the cost efficacy or efficiency that comes along with executing stablecoins. And so one of the ways that I kind of think about the marketplace is that the evolution in markets is underway. And that evolution is really characterized by taking costs out and enhancing efficacy within the market structure, reducing friction. And that's kind of where the market started. And I think that's like what typically I think a TradFi firm will jump in looking at greater ways to improve and reduce friction in transactions. But the revolution in markets will come when you have new pools of capital that are formed and accessing new asset types and that were previously inaccessible or difficult to access. So that's the revolution in markets, and that's what's starting to happen now. In my opinion, that's what's starting to happen now. The tokenization of everything, tokenization of funds, of private credit, of private equity, of real estate, of intangible assets, the ability to compose those assets into a unique portfolio construction with unique kind of risk and return dynamics, and making those available through this just new form of distribution. That's the revolution in markets, and that's just beginning.
Yeah, and Chuck, I think that's great. And I love your framing of this as a revolution, because I think we're at the beginning, the dawn of a new world, in terms of how markets are going to evolve. But how do you spark the revolution? What do you need to do to really to get it to increase the adoption, to increase the excitement, beyond this room, beyond DeFi, but with the true institutional investors? How do you bring them into the fold?
Do you want to take that one?
I don't mind kicking off. So I think it's a dual approach.
Yeah.
One is going back to what Cynthia said, exactly identifying the near-term blockages and providing solutions that people need today to get things done. The other piece of it is really evangelizing and telling the story to executives and people who make decisions about where to allocate resources and funds and commitment to build. And I think if you fall short on one, you won't accomplish the potential. Like you really have to do both. And I know for me personally, at a firm like S&P Global, we are tactically we are tactically building products and services that are relevant in this ecosystem. And I spend a tremendous amount of time evangelizing internally and externally, whether it's in policy circles in Washington or elsewhere, to explain how it all comes together and how the mosaic gets created. And if you fall short on one, we're not going to reach our potential, in my opinion.
I think this is, as I've observed in the last several years of being in this ecosystem and seeing different couple of market cycles over the last 6 years. The couple of observations I have on how it is that we can bring new investment products or bring new capital flows into the broader market is this constant gradually, and then suddenly, where we see more of that rush towards adoption. And so in the early days of my being in this ecosystem, it was a lot of how do we bring Bitcoin into client awareness and client portfolios, and so there was an education component into explaining to investors what this new asset is. How to evaluate it, how to value it. But then the next point was how do you deliver access to investors? And this is through custody and through vehicles that investors understand. And so having to think through this next wave of adoption, we see a lot of tokenization projects and this whole idea of tokenizing everything. We are going to see, and we have already seen, a lot of assets brought on chain. What we continue to focus on is, how do we make those assets usable, both mobile and interoperable across financial applications that are on chain? And what that does, and I think we talked a little bit about this, is there is a pool of capital on chain that can be accessible to traditional investors through the right tools that we can build to provide that access. And that access is going to come through, custody. It's going to come through regulated interfaces that will allow for investors to be able to deposit collateral and be able to take out loans on chain. At the end of the day, finance is still finance, and being able to get access to capital at lower cost is important to everybody wherever you are. And so this technology and traditional firms building that infrastructure to provide more access points is going to continue to drive more adoption.
I have a little bit of a hot take on the institutional question, which is that I think what's mainly needed, if we are to say that that's our objective, is to get like a lot more institutional activity. I think it's mainly packaging. I think it's like packaging this stuff into a recognizable thing that makes sense to the finance team, that makes sense, like
More than
that
just a wrapper.
Yeah, but like when I say packaging, I mean like it's a product from, a team, a recognized team. Like I think there are a lot of companies out there doing it in terms of asset management at the institutional level. But, in the DeFi space specifically, it's really about like what advantage can you get from DeFi? Like DeFi goes where TradFi can't in many places in the world or in many venues. And so it's like when you have these protocols that elevate, like to the point of Aave, for example, you have like 40, depending on which metrics you look at, like 40 to 70 billion in borrowing lending capacity. And so when you have something like Aave that's like, okay, now everybody finally trusts this DeFi protocol, like we can finally use this, right? And it's way cheaper and more, it's more efficient to get in and out. And so they're still not going to buy it until you package it up and say like, I'm going to do this for you. I'm going to take care of this for you. Because I think when you have, these sort of like, large treasuries at play, they're generally going to be more conservative type operators, right? So that's what I think. I think it's all packaging.
So who has to do the packaging? Who
Plenty of people want to sell to these institutional investors. So I know it's happening already. It's not up to, here, like at Stellar, the foundation exists to make use of the network, right? And so we know that these cross-border payments or the investments or all the things that people are doing on chain can be done fast, cheap, safe. That's what we're here to do. But, there's a layer on top and a layer on top of people building businesses on chain. And that's one of the ones that I think is going to be really successful is this basically on-chain, off-chain institutional asset management piece.
Yeah, I think the recent IPOs that have happened, in the last few weeks in terms of Figure and some others, I think have probably brought a lot of institutional interest into what I would call the blockchain space, which is now there's these firms that have gone public, they're worth billions of dollars. How do you think that's going to how is that resonating with some of the people that you're either talking to, or has that increased interest in the space from your perspective?
Yeah, I think it's very validating.
Yeah.
It's increasing access, I think, to critical infrastructure providers by having equity shares of these companies be made available to traditional investors. I also think your point about DeFi goes where TradFi can't. I think it's partially a regulatory issue, but partially also it's a different pool of capital that exists in DeFi. It operates on a different time dimension in the 24/7 and through block time. And traditional systems are not set up to be able to interact in that ecosystem. And so a traditional system and a traditional product is not going to be able to access that pool of capital. So again, I think the institutional adoption is going to come through building this critical infrastructure to be able to facilitate that capital flow between traditional markets and on-chain markets. Tokenization is one part of how it is that you're going to bring traditional instruments to make them available into on-chain markets for on-chain investors to access for gaining investment exposure. And then the reverse is being able to package on-chain assets into traditional wrappers to give exposure to traditional investors. And through this period of integration between TradFi and DeFi markets, you will see these product facilitations to be able to allow for that integration of these two markets. At some point, as we go further into the moving of more financial activity on chain, that is where you will see that path of migration.
So when you bring up the IPO and the impact that has, I would put that kind of in the same bucket of Larry Fink becoming a very vocal, outspoken advocate for tokenization, for the creation of the first spot Bitcoin ETF and Ethereum ETF in the United States. Those are catalysts, in my opinion, that help kind of force movement or enable movement, a broad set of movement, by providing credibility in the marketplace and bringing the discussion into the boardroom of many companies. Gosh, Larry Fink is saying that, what are we doing about this? And that alone is an important catalyst to move the needle across the institutional landscape. And then once firms realize that, if you talk to a DeFi maxi or a DeFi skeptic, they'll have the view, markets have always been centralized and that's the right way and that's how it's going to be. DeFi maxi, it's all going to be decentralized and centralized markets are going to get obliterated. In my opinion, the truth is we're going to be in this hybrid operating model with centralization and components of decentralization for a very long time. Probably the rest of my career. And maybe everyone's, I don't know. But once executives in a company realize that, okay, our clients are moving this direction and we need to be able to meet our clients where they are, no matter where they are on that spectrum between centralized and decentralized, I think those conversations are happening now. And that's where you get into this hybrid operating model and really lay the foundation to bring tokenized and real-world assets on chain and fundamentally enhance and alter the digital asset ecosystem.
Yeah, I agree that we're going to be in a hybrid model for a long time because we have 50 years of embedded technology that's not going to be ripped and replaced overnight by any means. But when you think about how we can, push the envelope and push, and increase adoption. I mean, what can we learn from the DeFi world that we can bring into the traditional world? Like what lessons?
Yeah, I think there's a lot to learn about, casting a wider net and having more points of access. I think there are businesses being built that could not have been built 10 years ago because of blockchain and crypto. We have in the institutional finance space, there's a company building on Stellar called ARF that does short-term financing for regulated payment providers. And so they are doing loans that last between 24 and 72 hours.
Wow.
And this is not, they're basically sending funds into emerging markets, they're funding payouts, and so this is just not possible with traditional, I can't even get a SWIFT, processed in that amount of time. So it's those kinds of use cases I get excited about because it's really enabling businesses to operate. It's super capital efficient. They don't have $100 million. They don't need $100 million because they're cycling the funds, so fast. So yeah, I definitely think capturing those use cases where blockchain, crypto, DeFi, whatever it is, are super high utility. That's what I get excited about.
That's a really interesting point. I think, I think about similar to macroeconomics and the velocity of money. So when you think about the velocity the velocity of transactions and from my seat as S&P Global, thinking about, and the velocity of credit risk changes and kind of the tick by tick changes and the need and use of money, but also how credit evolved and the pricing of that risk changes. That's a future I think we're heading toward. And once you kind of grasp the concept of the velocity can change, how much you have to hold in your reserve or how much cash you need to have on your balance sheet. This is what I would consider a second or tertiary effect of the things we're looking at right now, building right now. It's hard to imagine how that's going to play out, but my suspicion is that those kind of changes will come faster than we kind of anticipate.
Yeah, and I think use cases like the one that you just mentioned, that can really capture excitement and capture the mind share, I think are really what's going to help drive the market forward. I have to confess, I came from Broadridge at one point in my career, and the fact that they have, I think, $6 trillion now in part of their DLR platform, their distributed ledger repo platform, is impressive because they're allowing clients to do something with digital ledger technology that they cannot do with traditional technology. And I think finding more use cases like that are really, they go to the heart of the matter for, to be able to allow clients to do things that traditionally provide more, that provide utility that they couldn't capture. I think that's really where there's excitement and there's interest.
I think one other point that we haven't spent any time talking about, which is not lost on many of us that spent time working with operations teams in our traditional back offices, is the amount of inefficiency that exists in our existing back office processes. Mm-hmm. And this is a huge opportunity to be able to bring efficiencies into our settlement processes, into our corporate action processing and execution processes. And these are all going to be measurable, concrete improvements to the bottom line that also are very compelling from the standpoint of, how do we get more institutions focused on the opportunity set? So this is beyond the crazy, exciting headlines of somebody tokenized something else, but what else can we do with this technology that is going to change fundamentally the way that our back offices are able to process transactions and payments?
And
that was actually one of the first use cases that I became familiar with on Stellar when I joined Stellar for the first time in 2020. Yeah. And around that time, one of the use cases was, I think they were a beverage distributor or manufacturer, and so they had business in the UK and in Europe, and then also in Africa. And so they were trying to balance basically their payment flows
Yes.
of, receiving
Across
payments, cross-border.
currencies. Yeah.
And right, and like across currencies, and then they were taking payments from companies or like bars, in Lagos, Nigeria, and like they had to accept Nigerian naira and then
Right.
figure out how
What
to
do I do with it?
repatriate or what to do with it exactly. And so
And that process, by the way, is incredibly cumbersome
Yes.
and expensive and time consuming.
Right. So they started doing it. They created there was an anchor, a Stellar, what we call an anchor, which is a local provider that created a Nigerian naira stablecoin that could be used to transact. And then they were able to change that using the Stellar network,
That's
change it to a US dollar stablecoin or UK, do what they needed to do. And it was not easy. I mean, it's improved a lot now because there are a lot more protocols and there's, FX provisions on chain and like there's a lot more you can do now. But back then I was like, gosh, I had no idea how hard this is.
Yeah, in a real use case.
And I think stable coins are actually going to help drive the market forward in
For
a
sure.
very big way.
Yeah.
So once they start hitting, and probably, in the U.S. in a big, once the Genius Act is actually implemented and, companies start issuing their own stable coins, because then they're going to need tokenized money market funds, and it's really just going to move the market forward.
That's right.
So we, unfortunately, we're almost out of time. Is there any, as we think about getting to the 19 trillion by 2033, any last words in terms of how the institutional market can help, drive, increase and help us hit those markets?
Yeah,
that
I would
mark.
just say that, if you are thinking about issuing on chain or if you want to learn more about how companies are using blockchain, my door is open. And I think that the best thing that we can do as a foundation and to grow the network is to really listen to all of you. So I'm very interested in institutional use cases. We're really enjoying our new partnership with Centrifuge. So thanks very much for inviting us. But yeah, I'm... come find me after, or you can find my contact. I'm Crypto, CRIPTO, Ada on Telegram.
I would follow the similar vein that our best ideas and products we've launched have been from interacting with stakeholders in forums like this. So if you think you have any potential need for the data analytics or benchmarks that we create, or you think we could create or should create for you, we would love to have that conversation with anyone in this room and anyone in the ecosystem to help us advance our agenda.
And I'll just put in a plug for, we build product, but building the platforms for clients to access these products and building the broader market and ecosystem is going to take collaboration across everybody in this room and others in this ecosystem. And we look forward to working toward driving more infrastructure and platforms for clients to access these products.
Great. Well, thank you very much for your time. We really appreciate
Thanks
it.
for having me.
Okay.